Assalamu alaikum wa rahmatullahi wa barakatuh. Welcome to the 7th session of the Islamic Business Masterclass. We welcome those who have joined us on Zoom from our registered participants and also those of our guests who have joined us via the YouTube live streaming. Jazakumullah khairan for joining us this morning. We are going to be enjoying a very special presentation by our esteemed guest, Riaz Dhai of Durban, who is a competent alim and also a very experienced and seasoned business person and chartered accountant. So he has a host of skills which and expertise which we hope he will share with us this morning. And we look forward to benefiting from Maulana. We, for the benefit of our guests, will briefly give an introduction to the Islamic Business Masterclass. The Islamic Business Masterclass is a specialized short course, which is probably about 40 to 50 hours long, that gives participants an introduction to the principles and laws that pertain to business in general. So it covers the laws of sale, the laws of leasing, the laws of partnerships. It goes into detail on employment contracts. We talk about marketing and sustainability. We look at the implications of business assets and liabilities on zakat calculation. And we also look at code of conduct and a code of ethics. So the course intends to give business people and professionals a good introduction to the requirements of Islam in relation to their professional and business practices. And inshallah, we will be rolling out this course in the future, so you can follow us on social media or link up with us on WhatsApp, and we will send our updates to you. And for those who are interested can join in future as well. The course, alhamdulillah, is coming to an end very successfully, having covered most of the key areas. We will be having our last session in December, and we have really enjoyed presenting this course for the first time in 2022. Nonetheless, we have a good audience that has joined us already, and we look forward to the presentation by our esteemed guest, Maulana Riaz Dhai. So without further ado, I'd like to hand over to Maulana. Maulana, over to you. Jazakumullah khairan. You may go ahead and share your screen from your side as well. Jazakumullah.
Wa alaikum assalam wa rahmatullah. Jazakallah, Maulana. I think you just have to allow me to.
I've done that.
Okay. Okay, just give me a go ahead once my screen is live.
Good to go, Maulana. Bismillah.
Okay. Bismillahir Rahmanir Rahim. Alhamdulillahi Rabbil Alameen. Wassalatu wassalamu ala ashrafil anbiya'i wal mursaleen. Sallallahu alayhi wa ala alihi wa ashabihi ajma'een. Rabbi shrah li sadri wa yassir li amri wa hlul 'uqdatan min lisani yafqahu qawli. Allahumma anfa'na bima 'allamtana wa 'allimna ma yanfa'una wa zidna 'ilma. Respected guests and viewers, both on Zoom and YouTube, Assalamu alaikum wa rahmatullahi wa barakatuh. Inshallah, today we will be discussing a really important topic, and that is governance and reporting in SMEs, small to medium enterprises, and family-owned businesses. And not only will we be looking at some of the general topics related to this, but trying to bring this into an Islamic framework and perspective. And really, this is something that is the need of the hour and the need of the time, because we find that many of our businesses are growing, whether they be SMEs or family-owned businesses, and they tend to start facing challenges during that growth phase. And often they are hampered by a lack of quality governance and also reporting. So it's important for us to understand how do we apply these principles in our business. Sometimes we have a misconception that it's going to be very expensive and that we need a number of professionals to guide us along this journey. But what we will find is that, especially in the early years, as our businesses are growing, it's not something that's insurmountable. So the agenda for today, inshallah, we'll be looking at the context of planning for the future in light of the Quran and the Hadith, and just briefly touching on that, looking at the definitions of what are SMEs, what are family-owned businesses, what is governance, and what is succession planning, so that we understand the context behind what we're looking for. Then we'll go into deep dive into the concept of governance and reporting, and inshallah that will bring us to the end of the presentation. So we begin by understanding the concept of planning for the future, and just touching on some of the ayat of the Quran and the ahadith of Rasulullah sallallahu alaihi wasallam on the concept of planning for the future. And we begin with the incident that occurred between Musa alayhi salam and Khadir, which is mentioned in Surah Al-Kahf in detail. But we'll look at one of the incidents where both of them were passing by a village, and when they came to this village, they asked them for some food and provisions, but they were denied. And Khadir alayhi salam at that point then saw a wall that was breaking down. And the Quran mentions that this wall that belonged to two orphan boys in the city, below that there was a treasure that their parents had placed there. And the Quran mentions وَكَانَ أَبُوهُمَا صَالِحًا, that their father was a pious person. So Khadir alayhi salam then decided to put this wall up to fix it. And he was asked by Musa alayhi salam that, why are you doing this? And he then gave the explanation that when they reach the age of maturity, Allah subhanahu wa ta'ala wished for this treasure to be protected. Had the wall fallen down, then people would have seen the treasure, they would have taken it out. And this was part of the divine plan of Allah subhanahu wa ta'ala. So the very first thing that we take from this, and the Mufassirun actually mentioned this, is that the piety that we have and that we carry out and the obedience of Allah subhanahu wa ta'ala, this will result in our progeny being protected by Allah subhanahu wa ta'ala. So this is a very important point, and in everything that we do, as we plan our businesses and as we plan for the future, the first thing that we should be doing is we should have the fear of Allah subhanahu wa ta'ala. We should adopt taqwa. We should make sure that our dealings in all aspects are in accordance with the Sharia. And this is the most important safeguard that we can have in place to ensure the sustainability of our businesses. Building on this, we also take from the Sharia the concept that human beings can take measures to preserve their wealth for future generations. In fact, it's commendable to preserve wealth for future generations. Whilst we have tawakkul and trust upon Allah subhanahu wa ta'ala, we can put in reasonable measures to protect us against future events. And it is virtuous for us to take such measures so that we can ensure the well-being of our future generation. We find a hadith of Rasulullah sallallahu alaihi wasallam that is reported by Sa'ad bin Abi Waqqas radiallahu anhu, mentions that on one occasion, Rasulullah sallallahu alaihi wasallam visited me and I was extremely ill. And this was during the year of the farewell pilgrimage, Hajjatul Wada'. So when Rasulullah sallallahu alaihi wasallam visited me, I said, "Oh Rasulullah, you can see that I am in a lot of pain, and almost saying that I am on my way out. This seems to be my terminal illness, and I'm a man that possesses wealth, and there's none to inherit me except I have one daughter. So should I give 2/3 of my property as sadaqah in the path of Allah subhanahu wa ta'ala? Because I only have one daughter, and I'd like to use my wealth to be spent in the path of Allah subhanahu wa ta'ala." So this was, of course, the jazba, the desire of Sahaba radiallahu anhum. They always wanted to spend in the path of Allah subhanahu wa ta'ala. So Rasulullah sallallahu alaihi wasallam then advises him and says, "No, you should not do that." So Sa'ad radiallahu anh then says, "Should I give half my property as sadaqah?" Rasulullah sallallahu alaihi wasallam, again he says no. Then Rasulullah sallallahu advises him to say, "Give 1/3 in charity, and that is quite enough." Meaning that if you want to give a little bit less, you could even do that. Why? Because to leave your heirs well off, having some funds, is better than to leave them poor in a condition that they will be begging from people. And Rasulullah ﷺ then further goes on to say that you would never incur an expense seeking the pleasure of Allah subhanahu wa ta'ala, but that you would be rewarded for it, even if it is a morsel of food that you put in the mouth of your wife. So Rasulullah ﷺ is advising Sa'ad radiallahu anh that leave some wealth, protect some wealth for your progeny, for future generations. Allah subhanahu wa ta'ala has blessed you with this wealth. So don't give all of it in charity, but rather keep some for them so that they may not be poor. And also correct your intention. Whenever you spend something on your family, then with the right intention, seeking the pleasure of Allah subhanahu wa ta'ala, you will get a reward for it. There's an incident that it comes in Surah An-Naml, and on a recent journey, Hazrat Mufti Radha al-Haq, when he visited the UK and Barbados, 2 or 3 months ago, he visited an organization, and he was asked to give a brief advice to this organization. And he spoke about this particular verse of Surah An-Naml. And the background to the story is that Sulaiman alayhi salam and his army, they were once proceeding, and they came to a valley of ants. And the Quran mentions, Hatta idha ataw ala wadi naml. When they came to this valley of ants, one of the ants piped up and said, Ya ayyuhan naml, udkhulu masakinakum. O ants, enter your dwellings so that you are not crushed by Sulaiman alayhi salam and his soldiers, in such a manner that they will not know that they are going to crush you. So this ant, of course, did not realize that Sulaiman alayhi salam had this miracle that he could communicate with animals as well. So Sulaiman alayhi salam heard this as well, and the Quran goes on to explain his response to this. But Hazrat Mufti Sahib took out a few points from this that are pertinent to organizations, which I'd like to share with you and which we should internalize. And this entire surah is actually named after the ant, Surah An-Naml. So the first thing is that an ant is organized and disciplined. And Mufti Saab mentioned that in our businesses and in our organizations, we should also be organized and disciplined. We should not have a haphazard manner of working with one another. The second is that the ant smells from afar, and he senses from afar, and he stores food for the future, meaning that the ant plans in advance using whatever Allah subhanahu wa ta'ala has given him, whatever senses he has, he plans in advance. And support one another. Very importantly, this is something that we need to do in our businesses. We need to support one another. It's often a complaint of businessmen that we don't have support from one another, we don't have buy-in from one another. One person is trying to do the other person down, and this is not in the spirit of Deen, in the spirit of Islam. In years gone by, and perhaps in certain parts of the world you'll still find it, especially in certain parts of the Arab world. There was a sheikh that was narrating a story, and he mentioned that in one of the Arab countries, he went to buy shoes. And when he went to buy the shoes from a particular vendor, then that vendor said to him that, don't buy it from me, go down the road and buy it from that shop. So this person, being a typical Westerner, said that, don't you have it in stock? Can't I buy it from you? I'm here right now. So he says, no, I have it in stock. So he then inquired that, why won't you sell it to me? So this shopkeeper then says that, no, although I have it in stock, I'd like you to go to my friend down the road, or my competitor actually down the road. He has had no sales for the day. He has had no sales for the day. You rather buy it from him so that at least he can earn something to feed his family. Alhamdulillah, I've had some sales for today. So this is that support that we should have for one another. And then the next point is that the ant is loyal to its community, and it has concern for the welfare of the community. An ant is also clever and alert. So using their skills, never forgetting the route that it traveled on. So again, in our organizations, in our businesses, we should also be such that we are alert, we exercise to the best of our ability and skill the manner in which we chart this path through the business. So now we move on to the actual meat of reporting and governance. But before we get into that, I just want to touch on some of the definitions so that we understand what we are talking about. And the first one is what we refer to as SMEs, and these are small to medium-sized enterprises. So for those who are not familiar with this definition, an SME is a business that has revenues, assets, or a number of employees that's below a certain threshold. So these are smaller businesses. It doesn't mean that they are tiny one-man shows. Rather, they can be quite large businesses, but they may have revenues, assets, or employees that are below a certain threshold. And in South Africa, we have legislation that defines businesses as either micro, so the really small businesses, then you have small businesses, and then you have medium-sized businesses. And the definition differs between sectors. So within the manufacturing sector, for example, the turnover is going to be at a particular level, but it's going to be different in the financial services sector, different in the oil and gas sector. So each of these sectors have got their own criteria for what are SMEs. But one thing that we'll find around the world is that many SMEs are actually family-owned businesses. So generally, the challenges that are facing SMEs are very similar to the challenges that face family-owned businesses. And where SMEs are not family-owned businesses, meaning that they may be owned independently by a group of shareholders, you still find that a lot of the challenges that face the family-owned businesses are experienced in the SMEs, and particularly around the concept of governance and reporting and the importance of governance and reporting, you'll find very similar types of challenges in that space. Family-owned business, what is a family-owned business? These are family firms in which the family controls the business, firstly through ownership, and secondly, through management positions. So family involvement in ownership and family involvement in management is measured as the percentage of equity held by family members and the percentage of a firm's managers who are also family members. So you've got two issues here. You've got the ownership of the business, and then you've got the management of the business. Typically, most family-owned businesses start off being owned and managed by the family. But as they grow, it becomes increasingly difficult to have family ownership and family management at 100%. So you'll often find that whilst the ownership may remain, the family involvement in management will be diluted. And some may argue it should be diluted in order for the business to grow. So when we talk about family-owned businesses, and a lot of this relates to SMEs, they're quite important for the economy because they account for more than 67% of all businesses globally. They have a very significant contribution to the GDP of most countries. They are probably the biggest drivers of job creation. This is where jobs are really created. And generally, if managed correctly, they could have higher longer-term profitability. Of course, they are involved because families are involved, owners are involved, they're closer to the business. The level of philanthropy, humanitarian work that they would be engaged in is generally greater than your larger businesses. One of the advantages of a smaller or a family-owned business is that they're not shackled by statutory reporting. And now that doesn't mean that they shouldn't have any reporting framework at all. But if you compare it to a listed company that has a number of regulatory reporting requirements that actually take up a lot of time and energy and resources, family-owned businesses have the flexibility not to be required to do some of those things. Generally, the investment here is for the longer term. Unlike your larger businesses or some of the businesses that have private equity shareholders, in those instances, shareholders are investing for sometimes the short or medium term, 3 to 5, maybe 7 years, after which they want to exit the business. So family-owned businesses, we're generally talking about at least a generational investment, and most people would like that involvement to continue for multiple generations. And interestingly, you'd find that the statistics show globally that the level of generational transfer of family businesses is actually very low, meaning that the likelihood that a business is actually going to make it successfully to the third, fourth generation is statistically extremely low. And one of the reasons for that is that family-owned businesses often are slow to adopt the correct governance and reporting framework early on. that will help them navigate that journey. Family-owned businesses also have greater flexibility and agility. They can be very responsive to market conditions because they see an opportunity and they can invest in it without having to get approval from, global boards and global investors. They have that ability to innovate and bring new products to the market and service the needs of the market very, very quickly. Whereas your larger businesses would require to go through a number of hoops and red tape to be able to bring innovation out into the market. And because of all of this, in reality, they are closer to the economy. Some of the challenges that they face, and we'll unpack this in a bit more detail, is that at least half of family-owned businesses do not have a succession plan. And this is global, so the situation in South Africa might actually be very different. You might find that it's more than this, but there isn't really a succession plan. Who is going to take over? And do we have capable successors to take over if we're not here tomorrow? There's also often a lack of a strategy to link the everyday business operations to the longer term vision. Generally, you would find family-owned businesses are run on a day-to-day basis. People pitch up to work on a day-to-day basis, and there isn't a long-term thinking behind them. Of course, these businesses need to continually innovate to remain relevant and to be able to remain, ability to compete with larger businesses. And this is something that's a bigger challenge, and it's actually increasing with the level of innovation in different areas, whether it be in technology, whether it be in product development. We find that family-owned businesses are now being challenged to innovate. They also struggle to attract and retain talent. People don't want to go and work for a family-owned business or an SME. They perceive their work environment to be unfavorable. They perceive the long-term career growth prospects to be low as opposed to a larger corporate. And so they generally struggle to attract and retain talent. But talent, as we'll see a little bit later on, is a very, very important part of the growth path or strategy for a business. And then, of course, in smaller businesses, competition is rife. It's very rare that you'd find a smaller business operating in a segment where it has little or no competition. And barriers to entry nowadays in most industries have been reduced, making it very easy for people to enter into a similar business without a large capital investment or technical investment. And so they have to deal with this type of competition. And again, sometimes the competition makes them irrelevant. So when we look at the definition of governance, governance is a set of rules and guidelines that govern the way companies are controlled, operated, and managed. So it's not something that's very fancy. It's not a huge process that small businesses need to undertake. It's really just a set of rules or guidelines or processes that help to control, operate, and manage a business, right? And if we simplify it even further, it's a set of processes for making decisions. Now, as a business grows, whether it's an SME or whether it's a family-owned business, as a small business grows, it becomes increasingly difficult for the owner and the founder to continue making all of the decisions in the business. And the longer the owner or the founder holds on to that decision-making process, the more difficult it becomes for that business to grow, to prosper, to develop. And the same applies to organizations. Even if they're non-profit organizations, at some point to reach critical mass, the decision-making process needs to move away from the founder or the owner, and it needs to move to a team. And when you have that, you need a set of processes to make those decisions, and that is what governance is. So along with governance, a very important aspect that we also need to be to understand is that of succession planning. Now, what is succession planning? It's the process of identifying the critical positions within your organization and developing action plans for individuals to assume these positions. So you need to identify what are those critical things that need to happen within your business and who is going to take over doing these, assuming you are no longer around. So you need to make sure that you have the right people in the right job today and in the years to come. So having the right people in the right jobs today and in the years to come. Now, the question often is asked, why is governance and reporting important? Why do I need to be concerned about governance? Why do I need to be concerned about reporting? These are challenges that I need to think about. It's going to take me time. It's going to take me a lot of effort. It possibly is going to cost me some money. So what happens if I don't implement a governance and reporting process? Now, before we go into the detail, each business is going to have a different set of challenges. Each business is going to be in a different stage of its growth phase. So if we take it from the very beginning, where you have a single business, a one-man band, for example, that's starting something out, and he's now growing, maybe increasing to 2, 3, 5 people in his business, the level of governance and reporting that he needs to have is going to be very different to somebody that's now grown the organization, where now maybe perhaps they've got 10, 15, 20 employees, or the type of business that they're engaging in is becoming more complicated. Where you are on that growth phase is going to determine the level of governance and reporting that you require. If we look at the ultimate or the highest level in some of the large organizations, the multinational organizations, take organizations like Amazon, Google, Twitter, some of these really big organizations, the level of governance and reporting that they need to have is going to be, at the highest level, because you've got people running the business across the world, across time zones. You've got different types of markets, thousands of people working in there. So obviously they're going to require a lot more of a structured approach as opposed to a smaller business. But the journey needs to start for everyone. So when we look at governance, why is it important? One of the important aspects is risk management. As your business grows, you're going to have different risks. You might have the risk of sitting within your suppliers, and are your suppliers supplying you on time and in full, and are they able to give you what you are requiring? You might have risks sitting within your customer. You might have risks that sit within the regulatory space, that if you don't comply with something, you're going to have a problem. So governance helps to manage those risks. Then you have a delegation of authority. Who is responsible for doing certain tasks within the business? Governance gives you the framework to develop that delegation of authority, to identify the right people to do the right job. If you've got a business that's growing and you've got some serious regulatory challenges, then you need to get somebody that's an expert in that field to be able to deal with those challenges. If you don't, you might find yourself on the wrong side of the law when that risk is not adequately managed. And with delegation of authority also comes accountability, that a certain person has been given a particular job. They need to be accountable to make sure that that job is done in the way it's supposed to be done. And then there needs to be a process that if they don't do it, what are the repercussions and consequences? And again, this is where governance helps to create that level of accountability. Most importantly, I think that having governance at an overall level is a great enabler of growth. And in my experience, I found, over the last more than a decade, there are some businesses that I've worked with that have embraced this journey of governance and reporting and succession planning, and they've had successful growth. They've equipped themselves to be able to grow in their markets, in spaces that, had they not adopted the right governance and reporting framework, they just wouldn't have been able to capitalize on those opportunities. And then there are those businesses that were good businesses, but did not embrace the right level of governance and reporting. And you'll find that after 10 years, they stagnate. They might be in the same position that they were 10 years ago. You might find that they were unable to capitalize on certain opportunities, and some of them have become totally irrelevant. And particularly with the challenge that we faced with COVID and the impact on businesses, you found that some businesses that just didn't have that right level of governance and reporting, they weren't able to weather the storm. Of course, governance and reporting was not the only reason. There are other reasons that would cause that, but this is really important. We spoke about compliance and making sure that you have the right people to assist you in compliance. Now, when we think compliance, sometimes we only think about SARS, or the tax environment. That's one aspect of compliance, but there's a whole host of other compliances that you may not be aware of, which as your business grows, you need to be involved in. If you're in a specialist industry like mining, there's specific compliance requirements that legally you're bound by. If you're in manufacturing, there's certain specific requirements that you need to be involved in. And if you don't have that level of compliance in place and something goes wrong, you as a shareholder or a director can be legally held responsible for negligence. So compliance risk becomes a huge issue, and having governance in place makes it easy to navigate through that process. And then you have stakeholder management. As your business grows, you have different stakeholders. The very first stakeholder that you have are the shareholders. And this becomes more complicated as you have successive generations entering into that shareholding. How do you manage those shareholders? Do all of them have a right to operate and manage the business? And is that the right thing for the business and the longevity of the business? So how do you manage those stakeholders? And then you might have a customer group, you might have a supplier group, you have employees. As you grow your business and you have more employees on your books, you might find a situation where you need to now deal with bargaining councils, and you may need to deal with unions, particularly in the South African context. How do you deal with that, and what's the governance behind it? When we talk about reporting, what are we going to achieve, or why is it important for us to have a reporting framework in place? So the first thing is that it helps us to monitor our performance. What is happening in our business? And why do we want to know what's happening in our business? So that we can make the correct decisions. Generally, you would find that people that don't have access to information about their business, they make decisions later than they should have. Some of them are financial decisions. So what's happening in my business on a day-to-day basis from a financial perspective? Do I have the right processes and controls in place to ensure that I understand? And secondly, it might be operational. But again, without understanding how my business is operating, ultimately, I could expose myself to financial risks in the long term. And fortunately, we now in a position where reporting has become a lot easier. Technology has made life easy, even for small businesses, to be able to understand exactly what they've done. The days of a shopkeeper having to spend lots of time at the end of the day to calculate his sales by first, counting the cash and reconciling it to handwritten receipts, if he did that on a daily basis, and then comparing that back to his stock, and then on a once a month basis, tracking back to his stock to understand how it's moved. Although that might still be the case in a number of businesses, but there are lots of tools that are available that have done away with that on a real-time basis, a person knows exactly how much they've sold, how much of cash has come into the bank, what's happened with the movement of their stock, etc. There are those tools that are in place. The second thing is that it helps you to plan and forecast. When you have a good reporting framework in place, you understand what's happened historically, and you can then plan for what you expect to happen going forward. Whether it's a financial planning, whether it's growth, expansion, whatever it is that you're looking at, you might be able to plan and forecast having the right reporting tools in place. Of course, very importantly, it does assist you with compliance. Sometimes that may be tax compliance, or it may be other types of regulatory compliances that you have. With a sound reporting framework in place, you're able to more easily comply. It makes it easier than people who run their businesses where they once a year or once every 6 months they take a suitcase full of receipts and invoices, and they put it down on the accountant's desks and ask them to write up their books for tax filing. So there's things that are in place that make that a lot more easy, and we'll discuss that as we move along in some detail. And then timely decision making. The need to innovate. With competition coming in, small businesses need to be able to make decisions very quickly. And the best way to be able to make those decisions and to have a sound decision-making process is to make sure that your reporting is in place, so you know exactly what's happening in your business, and you can make those decisions. Now, again, we're talking about businesses that are growing, and how they can navigate it. You might find that when your business is really small and it's just you in that business, it's possible for you to manage some of the issues that we've discussed here without having a formal governance or reporting framework in place. That might very well be possible. But as you move through and you grow, and if you wish to grow and take your business to the next level, most certainly you are going to find these challenges facing your business, and you're going to need to have processes in place. So let's move back to understanding the Islamic perspective of governance. And is there, any basis for sound governance in the Sunnah? Is there any basis for the sound governance in the life of Rasulullah sallallahu alaihi wasallam? And when we study the seerah, when we study the ahadith, we will find that in fact Rasulullah sallallahu alaihi wasallam was a master in governance. Of course, it was relevant to the time that Rasulullah sallallahu alaihi wasallam lived in, and we need to contextualize it. Of course, technology was not prevalent. The manner of running an organ of state was very different. But Rasulullah sallallahu alaihi wasallam was not haphazard in whatever he did. There was a very precise strategy that he engaged in, in all aspects of his life. And if we just take the coming of Rasulullah sallallahu to Medina Munawwara, wherein now suddenly the Islamic State was beginning to be built. The conditions in Makkah Mukarramah were very different. It was disadvantageous. It was a minority. The manner that Rasulullah sallallahu had to operate there was very different. But now coming into Medina Munawwara, the tables were turned. But at the same time, it didn't all just happen without some very specific steps. The very first step that Rasulullah sallallahu alaihi wasallam took was that he developed the center of activity. Coming into Medina Munawwara, his first task was to identify the masjid, to identify a place for the masjid, and for the masjid to now become the center of activity. From there, Rasulullah sallallahu alaihi wasallam then realized and understood that we have some locals that are here, the Ansar, and then we have the Muhajirun that have come in, and we now need to create a platform for the Muhajirun who've left everything behind in Makkah Mukarramah, including their wealth, sometimes their families, to be able to successfully survive in this new environment. And Rasulullah sallallahu alaihi wasallam created pacts of brotherhood, ukhuwa, between the Ansar and the Muhajirun. So he solved that second problem, that we now need to find something. The Ansar have the desire to assist, but what is the framework that we're going to create? Do we immediately set up the treasury and, can everyone draw from the treasury? Or is that something that, at this level of our growth phase as a community in Medina is going to be challenging? So amazing solution that Rasulullah sallallahu alaihi wasallam came up with. Then Rasulullah sallallahu alaihi wasallam found that whilst living in Medina Munawwara in the initial days, there were non-Muslim residents that were part and parcel of the fabric of society. And there needed to be pacts and treaties to engage with these non-Muslim residents. And we'll find that this continued right through the Islamic Khilafah, where non-Muslims were always welcome and allowed to live within Muslim states. Of course, they weren't able to live in Medina and Makkah Mukarramah, but for issues of sacredness. But in other parts of the Muslim empire, non-Muslim residents were part and parcel of the society, and special provision was made for how to interact with them. Their rights were upheld, but there was a process of governance in place to engage with them. And then Rasulullah sallallahu alaihi wasallam developed the organs of state. And this is, as we see through the 10 years that Rasulullah sallallahu alaihi wasallam spent in Medina Munawwara, these were developed. Rasulullah sallallahu alaihi wasallam himself, of course, was the head of state. And when we study his life, we'll find the qualities of leadership in his life. But he also had a shura. He had a council of advisors that would advise him on matters. Despite being the Nabi of Allah, despite getting wahi from Allah subhanahu wa ta'ala, Allah subhanahu wa ta'ala himself advises Rasulullah sallallahu alaihi wasallam to have a council of advisors to make mashwara. And we need to take a lesson from this here. As founders, managers, leaders in business, it shouldn't always be my way or the highway. There should be consultation. It's a very important part of governance, and it's one of the reasons that governance is there, so that the leader, the founder, the CEO has people in place to consult with in terms of the decisions that they're going to make. Rasulullah SAW established the Baytul Mal, a public treasury, and in all of these organs of state, he appointed people that had the requisite level of skill to be involved in them. Amongst the council of advisors were those people who understood the needs of the time. Not every Sahabi was equipped to deal with every single one of these roles. The secretariat, people who would write down, Hazrat Hudayfa radiallahu anh, he would be responsible for writing certain things down, keeping the secrets of Rasulullah sallallahu alaihi wasallam. There was the judiciary, and competent people were then appointed to the judiciary. And as the Islamic empire grew, these people were then sent out as governors and judges to different parts of the Muslim empire, like Mu'adh bin Jabal radiallahu anhu was sent out because he had competence in that particular field. And then, of course, military was a very important part and organ of the state that was developed by Rasulullah sallallahu alaihi wasallam. So when we study this, we find that there was a great level of governance in place. It was not a haphazard manner of dealing with the running of an Islamic state, but rather it was quite deliberate. And from here, we can take lessons in terms of how we too should not run our businesses in a haphazard manner. So when we look at governance, we find that governance involves firstly developing certain governance processes, right? It involves introducing a board of directors. Now, this is going to depend on the size of one's business. It doesn't always necessarily need to be formal directors in the light of the Companies Act in South Africa. Of course, as your business grows, it becomes quite important. And you also need some level of independence to help make sure that the business is driven in the right direction. But often in the initial stages, it could be your core team, whatever you want to call them, whether it's an executive committee, whether it's your core team, whether it's the leadership. These are people that are involved in the business that have the ability to take it in the direction that you need it to go. But with that, you need to make sure that they have a sense of accountability. Very importantly, there needs to be a sense of accountability. Now, as you'll see, a lot of this deals with people management. So on the one hand, you might have all of the governance written down on paper, and you might want to employ that in your business. But if you don't have the right people to carry out that governance, or if you're the only person that's there, then the governance is not going to be effective. So it's very important to make sure that family-owned businesses and SMEs find the right people. And this is probably one of the biggest challenges that they face, matching the right skills to the right job. How do you do that, right? And some of the issues that one would face is that, do we bring in external people in key positions? How do we introduce the next generation into the business? Do we introduce them at all? Are there any requirements for us to bring them in? And there should be a clear division of roles and responsibilities and accountability. And then, of course, you also have the remuneration issue. Small businesses find it difficult to afford salaries for high-skilled people, but at the same time as they grow, they may need those people. So investing in the right people, developing their skills, and then also creating the right working environment. And this is part of the governance process, is that, to attract people into the organization, you need to make sure that they're comfortable and they want to work there. If it's a typical family-owned business where it's very autocratic, where family is, prioritized and protected, you're going to find it difficult to attract the right level of people. And alhamdulillah, the landscape in South Africa particularly is changing dramatically, where we find experienced professionals in different sectors of the economy now have the opportunity of joining family-owned businesses and growing those family-owned businesses. So they've gone out and they've got experience in larger businesses, which wasn't necessarily the case 40 to 50 years ago. 40 to 50 years ago, people didn't have those opportunities because of the apartheid government. Very few people had the opportunity. Now the tables have turned. People for the last 20 years have had the opportunity of growing, sometimes globally as well. And they have a lot of skills that they're able to bring back to the business, including developing the sound governance. But we need to create that environment to allow them to come through. And then, of course, very importantly, having that right governance in place assists us to develop strategy. It frees up time from leaders in the business, and that might be the founder, it might be the family, to focus on the strategy and translating that strategy into action. So somebody is looking after the operations of the business, and now moving on to strategy, that is being freed up for senior management. When we look at governance, some of the challenges that SMEs and FOBs will experience, family-owned businesses, the first at the top is separating between ownership, employment, and management. So generally the family own the business, right? But not everybody in the family is employed in the business. Or on the other hand, you might have people in the business that are employed, there's an employment relationship, but they might assume that they are owners in the business. So typically you have a father and a son. Father started the business, it was always his business. The son has worked in the business for the last 40 years, but there's no clarity around, is the son a shareholder or is the son an employee? And if the son is a shareholder, how did he become a shareholder? Did he buy into the business? Was he gifted a share into the business? Did he earn his share because he worked in the business? And this then leads to a lot of dispute, especially when that owner or the founder passes away. So separating between ownership, employment, and management is critical to understand, are you here in your capacity as an owner? So if you're an owner and a shareholder, then from a governance perspective, you don't have involvement in the day-to-day operations of the business. You are a shareholder and you are required to appoint people to run the business. If you're involved in running the business, are you an employee or a manager? And do you understand what your role is? And again, is there going to be some remuneration to you in addition for that role? And that needs to be very clear. So how do we cover that from a governance perspective? We need to have a shareholders agreement in place. Who are the shareholders? Very clearly defined. What are their roles and responsibilities? What are they owning? And what is the process for them as shareholders going forward, obviously in line with the legislation and the Companies Act. And again, this becomes very important when somebody passes away, because when they pass away, what happens? Do their heirs, their Shari heirs, have a right to now join the business? Can they be workers in the business automatically? Can they draw a salary? Are they expected to receive dividends? So as your businesses grow, and alhamdulillah, in our community, we have many large businesses, but sometimes we find that this framework is not in place. And this results in disputes that sometimes last for years and cost millions of rands. But more importantly, the impact on the person who passes away in the grave is greater. And we need to make sure that that is adequately managed. Do we have competent management, right? Are the right people in place? Is it automatic in the business that family members would necessarily come into the business? And that's not necessarily a bad thing. I mean, often you would assume that if the founder was bright enough to grow the business, we would hope that the children are also bright enough to take the business to the next level. And that's happened in many places, but sometimes that's not the case. So do we need to have some independence to ensure the longevity of the business? And again, when the business grows to critical mass, definitely you do need to bring in some independence, because you want to ensure that this business survives beyond the generation that's currently running it. If the next generation show the aptitude to be able to run the business and be involved in it, well and good. But if not, let's have a framework in place to prevent that from happening. So some of the things that could contribute to this, and these are challenges that face businesses, is, do we have good corporate governance in place? Do we have standard operating procedures in place? Are we carrying out best practice in our industry? Another challenge that we have is succession planning. So who's going to take over the business from a management perspective, not necessarily from an ownership perspective, but from a management perspective, whether it's internal family members or in an SME, it might be, there might be specific people that are identified to take over the business, but we shouldn't have a situation whereby we've got a business with a lot of potential. Somebody a key individual passes away or leaves the business, and now there's no way for the next generation to be able to take over. And I was engaging with somebody just this week where over the last 25 years, a really good business has been developed, but it's been run by two partners who are the founders. Their children have no interest in joining the business or taking over the business. And now the question is that what happens if one or both of them pass away, which of course we know is the reality. It's going to happen. It's only a matter of when. Is this business going to fall down? Everything that's been built over the last 25 years, is the value going to be extracted, even if it's via sale? Or is somebody going to come in and say, you know what, there's no direction behind this business, so we'll buy the assets, and whatever the partners have worked for, we're not going to give you that value for it. So in order to manage this, there needs to be proper succession planning, internal and external talent management. And then something that we often don't think about is the exit strategy. So generally, family-owned businesses and SMEs, they're a long-term investment. We want to pass them on to future generations. But we're increasingly finding that that's not always the case. As the business grows into successive generations, you have cousins and extended family that now become shareholders in the business. And it's not always pleasant for everyone to work together. So is there a framework for people who want to exit that business to exit it in a manner that's fair to both parties? Or you might find, and this is really the case, especially in the last 15 or 20 years globally, and it's now coming into South Africa, small businesses in niche areas grow to such an extent that somebody else comes in and says, listen, we want to buy you out, and we're prepared to pay a premium for it. Now, you might have one partner in the business that says, no, I want to keep this business because I want my children to come in. But the other person says, you know what, it's a great price. We can't pass up this offer. So do we have a framework in place? And again, it comes back to that shareholders agreement and the governance that's in place to be able to answer some of these questions. Okay, I'm going to move on to reporting. And although we've dealt with a lot of reporting already, I just want to summarize it before we end the presentation. From an Islamic perspective, one verse of the Quran that comes to mind that I've shared here, Allah subhanahu wa ta'ala mentions, Ya ayyuhal ladhina amanu idha tadayantum bidaynin ila ajalin musamman faktubu. That, oh, you who believe, when you contract a debt for a specific term, write it down. Write it down, put it down in writing, have the correct reporting framework in place. So building on this, although this specifically talks about a debt and there's conditions attached to it, recording business transactions is good practice. Why? Because we preserve the terms and the timing of the transaction. It's an effective tool that can be used to avoid disputes. And particularly as our businesses grow into critical mass, you will find that disputes are going to take you into the court of law. And when you get into the court of law, they are going to look for clarity from agreements that you have in place that provide clarity to whatever the business transaction relates to. So reporting is a very, very important aspect. And there's different aspects to reporting. But what does sound reporting do for a business, right? And we've covered a lot of this before, so I'm just going to briefly go through it. That there's the financial aspect of reporting, so understanding what my sales are, what my expenses are, how much of my suppliers I owe, how much of my credit, how many debtors, or what's the value of my debtors. And we should be able to see this almost on a daily basis. And we have technology nowadays that allows us, even as small businesses, there's some amazing technology that's out there. And I move to the point of digitization, where small businesses can actually use technology to capture information, to draft up management accounts on a daily basis, on a monthly basis, directly from the bank statement without somebody having to sit and physically capture it. And that's great. That's amazing, because it now means that we are able to review information timeously and make decisions very, very quickly. So you then have the aspect of operational reporting. So beyond the financial side of things, how is my business being run? Do I have a framework in place, to understand how I'm servicing my customer? Do I have a framework in place that tells me when things go wrong? Do I have a framework in place that tells me whether my employees are doing what they're supposed to do to manage the risks in my business? And that's where governance and reporting come very closely together is that the reporting enables good governance in a business. If I want to be able to understand what's happened in my business, for example, I have a dashboard, right, that tells me these are the key areas within your business. This is what went right. This is what went wrong. And depending on the type of business, you could get this daily, or you could even get it real time. Nowadays, you have business intelligence tools that could give you this information real time, that gives you information about transactions in your business that historically you may never have known, or you would have only come to know about it once a year, if at that, when you had an audit or something that went through. But often, as your business grows in scale, you would be in a position where you would probably not have seen that information. And we see this in business on a day-to-day basis, where senior managers with the right tools in place. And again, I must stress, these tools don't need to be very expensive. There's lots of cost-effective tools that can give you financial and operational reports on a daily basis. Then we come to integrated reporting. So reporting about our businesses beyond the general finance and operational side of things. And as SMEs and family-owned businesses, I think we've got a long way to go when it comes to integrated reporting. For example, how much of an impact does our business have on the environment? And I think most SMEs and most family-owned businesses don't have a clue. Right now, one could ask, what's the value in that? Now, when we take a step back and we understand that as believers, we're not just here for the bottom line, we're not just here to run a business to make money, but we're also here to protect the environment, those that are around us, to make sure that the rights of animals, the environment are looked after. So again, integrated reporting helps us to be able to achieve some of those things. Again, we come back to digitization. Alhamdulillah, we live in an era where we have the opportunity of using technology to assist us with governance and with reporting. So we need to make use of those tools. And inshallah, as time goes on, the cost of that would become a lot cheaper than we currently see it, and the value that it adds is going to definitely be a lot more. So that brings us to the end of the presentation. And just to recap, we spoke about good governance and reporting and having the right framework in light of the Quran and the Sunnah. We had a brief look at some of the ayat wherein we take some lessons from the incidents that occurred there around the fact that making sure that we preserve wealth for future generations, whether it be in our families or whether it be SMEs in general. Wealth is a very important part of Sharia, and the preservation of wealth is one of the objectives of Sharia. One of the maqasid of Sharia is the preservation of wealth. So part of the preservation of wealth is making sure that the businesses that we operate today have the right governance and reporting process in place to preserve that wealth for today, to manage the risks that we have today, but also be able to take that business to the next level for future generations, whether it be family businesses or external businesses, so that value is preserved. And that's very important. We then unpacked the definition of the SMEs, the family-owned businesses, understanding what governance is, and looked a little bit more deeply into the governance challenges that face SMEs and family-owned businesses. And again, I'll reiterate that we use those terms interchangeably, particularly in South Africa, because many family-owned businesses are actually SMEs. All SMEs may not be family-owned businesses, but certainly a lot of family-owned businesses are SMEs. And the challenges facing smaller businesses, whether they be family-owned or non-family owned, are common between both of them. And then we delved a little bit more deeply into governance in the life of Rasulullah sallallahu alaihi wasallam and how he created the organs of state to build Medina Munawwara, and then finally looked at the benefit of reporting and having the right reporting and framework in place. So this brings us to the end of the presentation. It's not something that can only be discussed in 1 hour. Of course, this one could spend hours and hours and discussing this. And the idea behind this is for you as viewers to understand that these challenges exist, and as is relevant to your own businesses, to now begin to delve deeper into them and begin on the journey. It's not something that you're going to solve immediately. It's not a 1 month journey. It's not a 2 month journey. Often this is a 5 or 10 year journey. So if you haven't started on the journey and your business is in a growth space, most definitely this is the right time for you to start. May Allah subhanahu wa ta'ala bless us with the correct understanding of the Quran and the Sunnah. May Allah subhanahu wa ta'ala give us the correct understanding of how to do business, how to govern our businesses, and how to lead them in the best manner. Wa akhiru da'wana anil hamdulillahi rabbil alamin.
Jazakumullah khairan to Maulana Riaz Dhai for what was truly a power-packed presentation, and very, very valuable insights have been shared with us. And just to highlight two key aspects, one is that these processes and implementing these measures need not be a very costly exercise. I think just by reflecting over the key elements that Maulana covered in the presentation, and for businesses to work those principles into their operations gradually, could be achieved, at a very low cost. And there definitely will be some cost, especially when it comes to hiring the right people and investing in technologies to make our processes and reporting more efficient. But that should not be seen as an expense. It should be seen as an investment, because those expenditures, those disbursements are actually going to grow our businesses for the future and make it more resilient, enhance the longevity, and so forth. So we should see those expenses as investments instead of costs to the business, and the returns on those particular investments will definitely be seen in the long term. Before we close the session, we'd like to open the floor for any questions that our audience may have for Maulana. And whilst we wait for those, we'd really like to extend our deepest appreciation to Maulana Riaz Dhai for his valued contribution, taking out the time to prepare. It's definitely, we can see ourselves that this took a long time to prepare. A lot of thought has gone behind this presentation. We express our deepest gratitude and thanks to Maulana. Allah reward him for his contribution. And inshallah, we look forward to benefiting from his expertise and knowledge on other areas pertaining to business. With that, I don't see any questions coming forth. So we will close the session. Jazakumullah khairan to all those who have joined us online and on Zoom. And we look forward to meeting you all in future presentations. Wassalamu alaikum wa rahmatullahi wa barakatuh.